Welcome back to today's recap. It's Tuesday, March 11. You can see the time. So I thought that they would bounce this morning. Thought there was a good chance of that. I was wrong. They did not do that. Kind of interesting that they closed right above this line here. What is it? 555.59. That was the low of yesterday. So not a coincidence that they managed to get above that and close right above it at the end of the day. And they're below this zone. I left the zone on the board because it came into play today. There were a few clues at the end of yesterday that the bulls could have staged a little bit of a rally. I mean, not a ton, but they could have pulled up a little bit, and they did try. Here is a screenshot of the morning. You can see it's 6:50, almost 7 o'clock, a few minutes before 7, and this is what the futures had done. They got lower, and they were doing a pretty good job pulling up into this zone, trying to fight the top of it. 9:30 Eastern is when the market opens, and they had the ability, the bulls had the ability to get above this zone and push price higher. But by the time the market opened, they were below this zone, as you can see, and they fell. So if we look at a weekly chart, I just want to point out that while we don't want to see daily closes below this low here, the weekly close is really important in relation to the zone. So we don't want to see, or let's just say the bulls don't want to see a weekly close below this zone. So we've got a few more days. They can mess around with this and they can still jump. So this whole area, basically the zone, the dashed lines here is what's important. This is kind of a line in the sand for daily closes. The bulls certainly don't want to see a weekly close below 555.59, but that's another story. So we'll give it a couple more days, see what happens. And the timing component could mean something that's slightly different since they didn't pull up today. Perhaps what we're dealing with is that 20% of the 80-20 type of thing. I thought maybe there was a pretty good chance, 80% or better, that they could jump this morning, and they couldn't do it. That means the inverse of that probability could be in effect right now, which means something else is going on. And incidentally, I don't see any solid, clear signals on any of the multi-hour charts, all the way down to smaller time frames that would indicate that there's some type of trend change happening. But since things are unusual, who knows what's going to happen in the morning. We'll have some good ideas for levels that could produce some base hit scalp trades. We need to just wait on the market and let it tell us what it's going to do. And when it does, we'll know. Before the opening bell, this was sent out. These are the levels. The highlighted pair of levels is the zone, and the screenshot below shows that. You can read through this if you want. Between the time I took the screenshot, 6:50 or so in the morning, to now, they were looking weaker and weaker. So I talked a little bit about that, and that was the game plan that we were working with before the opening bell. And of those levels, here is how price reacted off of them. Scenario number 1, playing by the rules. And the rules would dictate that you're going to wait till 9:45 or 15 minutes after the opening bell before you start getting into trades, and that happened right here. They had not hit the level. They got close during that 9:45 a.m. candle that closed here. So the next time they came up and hit it would have been a short trade per the rules that gave you a pullback after a few minutes of at least 4 points, quite a bit more. And that level 561 was done for the short side for the rest of the day. And they came all the way down to 555.59. So even with our 5-cent buffer, which would be 555.64, wasn't enough. That's a penny away. That's a near miss. Unfortunately, that would have been a great trade because they bounced more than 10 points just in a few minutes. But we can't count this because if you saw that type of thing, that's a near miss. And you don't know if the next time they come down to the level, if it's going to work as well. As you can see, they did drop quite a bit. That would have been perhaps unnerving to be out of the money, not knowing if they were going to go lower because that was the trade. But in this case, they did eventually pull back up. But we're not going to count this trade at 555.59. That was the original level because of the near miss. You got below it, but there's not enough time until later. We'll talk about that in a minute. So this long trade's off the table. So nothing here. And then they get down to 553.55. The low was 553.57. That's 2 pennies away, but we've got our 5-cent buffer. So the trade would have been triggered at 553.60. And there's a nice base hit. Bounce up right there. 4 points or more. So now this level at 553.55, as identified in the morning, is off the table for any more long trades. They got under it. Notice the time. It's 13:22 or 1:22 p.m. And now it's 1:42 p.m. Exactly 20 minutes. Go ahead and take this for a short trade if you want. Now, this was interesting. You would have triggered this trade at 553.50, gone short, looking for 4 points. They came down exactly 4 points, or at least the equivalent here. They came down to 553.10. So if you were trading this and you were quick and just pulled 4 points or close to it, you would have had some money. But if you missed that and they came back up to your entry point, you would have jumped out because that's just one of the rules. We're going to go ahead and count this as a 4-point base hit because Technically, that was possible. Here's where problems started, though. 555.59 was not traded on the short side yet. We're going to move this down to 555.54. That's 5 cents toward price. They did this little thing here. It wasn't a near miss, still pretty far away. Let's see, somewhere in the neighborhood of 555.39 or so. And then pulled away, but it wasn't a near miss. It wasn't within 10 cents. It's just one of the rules I have. With this type of behavior, though, just knowing that this level was the low of the previous day, and so they bounced off of it, they got underneath it, and now it's the afternoon. They've got a couple hours, an hour and a half or so before the closing bell. You could look at this level a little differently, thinking the bulls probably want to get above this thing. There was a lot of back and forth on this thing. So if you went short at 555.54, they were out of the money fast, and these little spikes down here didn't happen in the E-minis. That's just a strange anomaly that sometimes happens on the SPY chart. They got out of the money, and soon you would have hit that 20-point max loss limit as they continued higher. And honestly, I don't typically reverse in that case. You could, but I just reverse on a fumble, which is a different scenario. But in this case, you would have given 20 points back to the market, and that would have been it for the rest of the day, because we're not going to take a short trade here because we've already done it over here early in the morning, although it worked. I'm not going to count it, just to be fair. And they didn't get close enough to 563 for that trade to work, even with a 5-cent buffer, which I typically don't apply to zones, just the way I like to do it. So a positive 15 points and a negative 20 points. So you would have ended in the red a few points, 5 points to be exact. Those were the trades if you were playing by the rules. So here's the trade that I took. It was not by the rules. I should have done it. I should have gone short at 561. I didn't. My thought was this. So the futures in the morning, they were up here fighting the high of this zone, 563. So if price could get above the low part of this zone, they could fight it and go higher. And I thought maybe I could pull 15, 16 points out of this area here. So what I did, instead of going short right there, I went long with 2 contracts when they came back down into 561. So totally defying my own rules, and you can watch what happened. Another interesting thing here, kind of silly here, but as I'm looking at this trade get out of the money, and I'm in the red quite a bit, someone taps me on the shoulder. I was kind of concentrating pretty hard on this right before 10 o'clock and said, "Conference room's ready. Are you ready for the meeting?" I completely forgot that I had a meeting that I was actually presenting in. So I had to just make a decision. So instead of waiting this thing out, I closed up shop, or just closed this trade out completely at a $1,600 loss. It was 16 points in the red. Notice the time, as it was getting close to 10 o'clock, I bailed. I'm just going to let you watch this as it's, there we go. Now it speeds up to a little faster. I would have probably gotten some points out of this if I had waited it out, but I didn't. So I'm glad I kind of got out then. I mean, I don't like the loss, of course, but I was in this meeting for, I don't know, an hour and a half or so. Scrub ahead here. And when I got back to screens, it was, here we go, about almost 12 or so. So I just made all these lines dotted just to show that I wasn't interested. I'm not interested in taking any more trades. I let this thing run for a little while longer, stopped it after I got back from lunch. I think it was about 1 o'clock or so, a little after 1. So one trade for me that ended up to be a loss. Happens sometimes. This brings us to the tracking log. The first one is the PBR, or the playing by the rules log. I think earlier I said it was negative 5 points for the day. It's actually more like negative 8. You can read through the notes. You can see 3 base hits for 12 points, and then the max loss limit of 20. So it would have landed you right here with 2 contracts. So we're tracking this, and you can make a note of the metrics and see where we're at to date. And then on the Sam's Trades log, a 16-point fumble, essentially, with 2 contracts, trying to go long where I should have been short, and gave back 16 points or $1,600. And that was it for me. Not going to make any calls about where they might go tomorrow. They had a chance. The Bulls had a chance to do something today, and they didn't. So does that mean they're waiting for another time or another price or another destination? We still have 3 more days in the week for things to happen, because the weekly close will be important. So thanks for tuning in to this recap. I appreciate that you watched, and I hope you liked the video. I hope it brings some value. I'll talk to you soon in the next recap video. Have a great day.